Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Hope you're all doing okay today after the Thanksgiving holiday here in the U.S. Um, and that you didn't overdo it. But interesting thing, this morning the CME data was down. That happened to me. I can't even tell you how long ago it was, but I was trading the large S&Ps. Uh, and when I always make the comment, you hear me say somebody tripped over the cord at the CME. That's kind of what can happen. So that's the nature of trading, guys. Anything can happen anytime, and external events. So that's why this is always a business of probabilities and maybe. So maybe I can show you some ideas today based on the condition of the market, and you can move your progression forward in building the trading business into something potentially sustainable. So let's talk about that. How are we doing in YouTube, by the way? Thanks, Marty. Oh, Stephen, thank you. Okay, didn't see that. Appreciate it. And good morning again, everybody. Let's take care of business and let's get going. There's some interesting things going on that I have to tell you about, plus the Black Friday sale is here. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this isn't a trade calling room, but if we get to something in real time, we'll discuss it. And if you have questions, please post them. I'll do my best to get back. There is a bit of a delay, and I do stream on a different computer and monitor and everything else, so I have to kind of, it's not right in front of me. So just be patient, please. Also, if you're interested in Trader Lab, there is a link in the bottom of YouTube. If you'd like to visit the Trader Lab community, it's a community of like-minded traders who've come together to leverage their collective experience. It's about the business of trading. Doesn't matter how long you've been trading or how you approach it. What does matter is that you have a sincere desire to turn your trading experiences into a sustainable business. And that might require you to maybe open your mind up a little bit to some different elements than what you might think trading is. Now, the thing that catches most of us is we all have random winners, and because we have winners, we think it's just tune, tweak, make it better. It's just very logical. We all do it, and we all have done it. The difference is, though, that you'll always have random winners. Doesn't matter. Every indicator in your software toolbox will have random winners. And if you open your higher time frame toolbox, you're going to see 100 or 200 indicators in there. They all have random winners. But why are there 200 in there? Because I would say, and I'm going to go out on a limb, none of them have an edge. What they have is randomness. So the idea is something that works randomly. Our goal then is to put a few of them together or more of them together in more time frames, and somehow with these random assortment of inputs that have random winners, that somehow we're going to extract a statistical edge that over time makes us profitable versus over time leaks equity out of the account. So most of us see patterns. We see winners, and we think if we keep doing it that we will become profitable and sustainable. But unfortunately, if you were playing a game in the casino, and let's say the casino was playing a game, I should say, and they didn't have an edge with it, even though they did win, they wouldn't keep playing the game, would they? Because they would lose money. So they don't do it. They only play games with an edge. So we're in the same business, guys. We're in a gaming business. We only control what's on the front end. In other words, what we do and what our process is. We don't control whatever else happens. We certainly didn't control the Merc going down. No data this morning. You don't control a news event or somebody else, dropping a bomb on your position. It's just part of the random distribution of outcomes. So, in fact, I'm going to tell you, I had an interesting over the holiday yesterday, Thanksgiving. You kind of get together and mingle, and I was starting to talk to someone about the psychology of this business and how foreign it is. And it was interesting because if you step back and think about what you're trying to do, there isn't a more difficult thing than actually doing and executing your plan and dealing with randomness in your psychology. I believe anyone who comes to Trader Lab can learn how to trade, and we have terrific examples of that in Trader Lab. And it's not learning from scratch, though you can. What it is understanding market mechanics. How does the market work? Why does it do what it does? How can you get in alignment with it with structured trades that you need to vet? And then disassociate yourself from your emotional stimulus, your fear and your FOMO, but just show up. Show up to do your job. Now that, with all the adrenaline and the dopamine and the gambling and the FOMO, very hard to do it, but that is your job. So if you're going to be in this business, not only is it about profitability, it's about the obstacles to profitability. And most of us spend our time looking for setups, not understanding the business we're in. We're too hung up on indicators, plug and play, and having that secret sauce. Well, there is none, so that's why Trader Lab exists, to help you sort out the fantasy and then the reality of the business. And hopefully, if you understand what the business actually is, you might have a better opportunity to navigate it and create sustainability. So let's go a little further. A couple announcements. Let's see. It's always magic to try to get everything working. We have our Pro Trader webinar series is going. All times are Eastern Standard Time. You may recognize some of these personalities from internet world, influencers, and the rest of it, but this might be interesting to you. You want to check these out. Here's the dates. I'm sure you could see those if you go to the event section, and also check out bookmap.com on the website. So, in fact, Carmine just finished his up, or is finishing it up. So these will be available on YouTube eventually, is my understanding, but I don't know when they'll be available. So if you can catch them, catch them. The other thing, you might have heard of Black Friday, right? That's today. 50% off Global Plus quarterly and 50% off data for 3 months. This is good from November 28th to December 31st. So you are going to want to go to bookmap.com if you're interested in saving dollars. They also have discounts on other subscriptions. Go to bookmap.com. This is probably the best price you're going to see for Bookmap. You can also get your hands on a lifetime subscription. There's other options available, but just check them out. I wish when I purchased my Bookmap many years ago that they had this option. They didn't have it. So you guys have a great opportunity for a great product. So check it out. Now, let's get into Trader Lab. And thanks again for visiting the lab today. How are you guys doing? You all right? Okay, hierarchy. This is really the process that I do every day. Anyway, if you're new visiting here, just understand something. Trading is not complicated. It's really simple. Now, this may sound extremely contradictory. It's simple, but random. So there's two different elements at work. Randomness, which we perceive as complexity, and then there's trading, which is actually simple. So if you separate them, then you can concentrate on market mechanics. Market mechanics are random but not complicated. The process of the market is the auction, and the auction is just price discovery. That's why you have a market. And I always like to use the analogy that the market, the auction, is like your supermarket. You're trading in the supermarket, but in a very high time frame. Prices don't change much. The retail price is where high volume is. Everybody accepts it. They're willing to do business. Buyers and sellers come together. When the price gets too high, less buyers are going to pay it until we run out of buyers. And then if the sellers want to sell a product, they have to lower the price to attract the buyers. And if it gets back to a price that's perceived as fair, then that volume is going to pick up. On the opposite side, if the price gets too low, what will happen is the sellers are not going to keep it there. And then the buyers are going to be buying that price, absorbing it. That's our absorption. And then what we're going to see, if the buyers are absorbing, then the sellers are going to raise the price. And then it comes back. So this rotational event is our shopping experience. And it happens, now this is where the randomness comes in, multiple time frames. So in your time frame, you have this process going on. The way we actually see this is through volume. And we see, and it's the volume profile, I call it a chassis, because it gives us information that price alone doesn't. It shows us, because all prices are not equal. So a high of a day is going to be an exhaustive, we're going to run out of buyers and we're going to run out of sellers at the low of the day. But what's happening in the rotations? That's our time frame. So inside of all different time frames is this process. So that's what makes it complex for us. Then what is the condition of the market in the time frame we trade? For example, today the market's going up. Okay, but then what? How do we trade a market going up, and what do we do with counter rotations? So if the higher time frame is up at the moment, or the intermediate time frame is up, but we can still be taking shorts subject to the context in our time frame, and that means condition of the market. So you could be short in an up, right, if you're a counter trend trader, or if you're a alignment type trader that you only trade with a dominant side. So the context, let's say in the intermediate time frame, is up, and you're not going to take shorts. You're only going to take continuation longs to align with the higher time frame. That might be your objective today so far, or not. And then Bookmap is what I call tip of the spear. It's the order flow tool that gets us down into the micro structure. I like, where the rubber meets the road. Now, higher time frame. Let's go take a look. Now, if you remember, this was the Acapulco cliff dive. We opened higher in range, got late shorts in the market. This was our target for this move. Missed it by a hair. Horseshoes and hand grenades, and then short squeeze. So you got sellers initially to take out this low, late sellers from this. Oh, what happened? I missed it. Okay. They get squeezed, and then the sellers in this leg get squeezed. Then we open here, squeeze, open, test. This is a key level, 70, which we tested in the ETH, squeeze. Then we had, this was a target up here for Wednesday, Tuesday, then gap. This is Wednesday, Thursday closed for the holiday, and this is this morning. Now we're higher up. This is a little gap right here that was left on this day, and then we have an extended target and no clue. Nobody knows anything. It seems like this would be like a big reach, but structurally, this yellow line represents high volume. Remember, a fair price. It's up here at 73.5. Now, not necessarily for today, and maybe never. We might get up in here, and then wherever you go, you go. This is part of the thrill. But let's look at what it says about price. Let's come back. This yellow line is the highest retail price from over here. What it's saying is, if we come down to a price, we did it on the tariff news. Remember, 100% tariff on China. Everybody jumped out the window. The buyers came for it here. The buyers are back over here. So this is your too low. Then as we sequentially move up, this is your high volume or retail price, supermarket. And then if we leave it, you can't buy it there. You can't buy it there. Now, this is the high price for the entire, going up in time frame, the entire consolidation from this swing to here and what's in here. That's at 70. And when we opened here, we checked it in the ETH. It was too low. So it's like we're below this. That's too high. But now we found too low at a different time frame. This is too low. Who knows? Gap. Okay, we're out of here. Test here. Now too low. Same process. Now up here. What about this price? 82. I guess it's too low. Then we have Wednesday. Where was that price? Right here. And this is the developing price. So too low. And then wherever. And then the gap, and we'll see. Life in the fast lane. This is the higher time frame. Now, the reason it's important is to think in multiple time frames. And then when you go down into the intraday, it's going to do the same process. It's going to be going. And how do we see the retail price when we get into shorter time frame? This is an interesting question. Let's answer it. Let's hold on a second. Whoa. A critical error. All right. Don't criticize. All right, RTH open. Let's look at some other information here. Yesterday's retail price was 42-ish. I hope. Hold on one second. I have to make sure I have my levels are correct over here. Okay. And then, so yesterday's retail price, 42. ETH retail price last auction. Don't forget the Merck was closed up until 7:30 Central Time because of data problems. No data, so I don't put a lot of confidence, you might say, in the ETH auction. But it's all you got, so you work with what you have. ETH low. I believe that's the ETH high. Yesterday's high. What's over yesterday's high? Wednesday's high, I should say. Stops. What else do we know? We have that little gap. That's on the hip parade. Then we have the 72 and up in this area. If we get there, no clue. So that's not our job. Our job is to get in alignment. But what do we know? We know the higher time frame is up. So there's still nothing that says it's short, unless you're trading the short time frame counter trend rotation. And this doesn't mean you can't be trading both sides or anything. But for developing traders, and in the ES, the idea is vet a trading plan. Hold on a second. I got to move some orders. Sorry, guys. I normally don't trade when I stream, but if I got positions on, I just do my thing. Hold on. Sorry. But if you're a developing trader, the thing to do is start out with a dominant side. Now, a lot of us have FOMO and we want to flip and flop. But if you can't trade with the dominant side and then skip the counter trend side until it actually changes, you're not going anywhere. You're just in FOMO world, in my opinion. If you can't trade with the dominant side where you have maximum edge and the wind at your back, and you're still going to take stops, then what are you going to be doing when you're fading the advancing side? Do you think that's good? How about using the fades initially for trade management or to train yourself to recognize change? All of this is a process. In the business of trading, you're going to be your trade manager. You're going to be your CEO of your trading company, and you've got to take this as a serious business. When you're looking at your own behavior as a trader, you've got to look at it as an owner of a business, and you don't want that trader putting you out of business, right? So imagine you're sitting on a trade desk. When I sat on a trade desk and I had traders, believe me, they had to do it the right way. If they couldn't show me statistics or why they were, what was their process to evaluate an opportunity, and it was all made up and brought in to the day, not made up during the day, then they did not stay in the business, or at least they didn't work with me. Now, why would it be like that? Because this is business, guys. Unless you're playing a video game and you're just gambling, which is entertainment, if you're into creating sustainable business, you've got to approach this just like you would any other business. But if you're also CEO and employee, if you will, you have to not just come in every day and play, unless that's what you want. You have to come in every day and with intentionality and hold yourself accountable. May not sound like what you want to do, but when you're the boss, You got to manage your business or you'll go out of business. Don't take it as being harsh. It's just reality. So, everybody with me so far? How we doing? Okay, I'm still long. What can I tell you? Not a recommendation. Now, when I came in today, I posted in Trader Lab, and I always kind of think about this, especially on Wednesday before the holiday, and now today, maybe more so. We're in a light, so you know, we're in a light volume drift, which doesn't change anything. The shorts are getting squeezed. Wonderful. You do need the shorts to become buyers, right? And also the trend is up currently. And we're going into the end of the year, which is typically a strong time for the market. So anything can happen, of course. The other part of this is that being it's Friday, the possibility exists of evening up and flattening out before the end of the day. Also, EU closes at 10:30 Central Time where I am, so volume might even get lighter, which doesn't mean it won't drift. All it means is you need to understand the condition of the market and have a plan and then act accordingly. So we can anticipate selling or profit taking before the weekend at some point, but it never has to happen. So it is, if you think the dominant side is longs, you might just trade the longs, manage your trades, and at some point, if we get the responders and we come out the low of the day, which may or may not happen, that's one possibility. The other part is we just counter rotate, take out the weak longs, and you know the market's long to the gills. So there's a lot of sellers that are trailing their stops behind the market. At some point, remember, the market goes up to go down. At some point, if we run out of buyers, which may happen, then what happens? What do we get? Sellers. And that doesn't mean the end of the planet. It just means the possibility. And that's all you have in trading. Now, RTH open. This is your RTH open. Let's look at what we're doing here. We're opening. Let me just get my levels going again here. Where's that? Okay, value area. Okay, we're opening in range, in value, and it's higher in range, in value. What does that mean? We are anticipating potentially an overlapping day. And are we breaking out one way or the other? Well, if it's in range, in value, the market's in balance. So we can consider the possibility of two-sided trade. What is likely? A low conviction day. Are we breaking out of the prior day's value area, which is this? If so, then what does it mean? We have to trade in the direction of the breakout. And are we outside of the prior day's range? Then what do? North. So this is our context grid sheet. So this tells us, and we know the higher time frame is up, so this tells us we have a long lean. Now, the problem for us, and it's really not a problem, it's just market mechanics, is the possibility of two-sided trade, and we can just slosh from both sides now. But going a little further, statistically, if we're higher inside of yesterday's range, there's a 98% probability to take out the first hour's high or low. Taking out yesterday's high, about a 58% probability. Taking out the first hour's high, 66% probability. Getting to Wednesday's point of control, there, 68% probability, 66% probability taking out the first hour's high. So you can kind of see, and value area high, 72% probability. Everything is going north, would you say? That's statistics. So now you're in the Trader Lab and you understand we're going to be looking for longs, unless, of course, everybody runs for the exit, and you don't know this. But statistically and probabilities, and now this is another level that you have to be aware of. This is a low volume area, just so you know, from Wednesday, where the market was rotational. This is an outside edge. So I have that on my chart, just so you know, and it's on top of this value area low. Value areas where 70% of the volume took place. Naked volume point of control is your high volume area or retail price. So fair price from Wednesday, outside edge, too low. Yesterday's high, stops over there, and that mini gap. So all this says go north, and who knows? Watch. Great. RTH open. Now I'm going to show you opening trade. These are microstructures, and it's more advanced. You really have to vet a specific trade, and I call this the opening trade, and it is microstructure, so it's very fast, but it gives you a sense of how shopping works. How does the market work? We can see it here. So let's go back to what we know. This is the retail price, has about a 68% probability. You have to vet all statistics for yourself. That's one part. This is the retail price from the ETH. Now, we know the ETH was an abbreviated session, so, take it with a large grain of salt. ETH low, ETH high, 98% probability to take out one or the other. The lean is north, but clueless. Watch. This is the first retail price. Let's watch the language. Now, this yellow line is, think of this like your supermarket or developing daily time frame. Okay? The yellow line is the highest volume as it comes in, and it's going to move around as the distribution of volume. But what creates the movement in volume? The shoppers and the buyers. So the buyers and the sellers. But let's look at language. So I don't use indicators, and I always like to say what I'm doing is I've replaced the indicators, which are just price derivative, some kind of price derivative element, with actually reading the behavior using order flow. And this puts me very close to the market versus some kind of lagging, maybe conflicted something or other. I don't use them. I'm not interested in being with everybody else. I want to do what other traders don't do. So I had to learn a foreign language or a musical instrument so I can speak the language. If you can speak the language, might that give you an advantage if you actually understand what's happening? Let's look at what's happening. RTH open, sweep, clueless, new first retail price. Here's the first volume. And now we leave it. So basically, this is too high. That's how I look at this. Why? If this price is too high in your store, now this is very fast because we're in micro. Remember, your store, your supermarket, when does the price change? It goes on sale for a week. Here, if this retail price is too high, the shoppers won't pay it. They leave the store. So now we have resistance. Watch. Where's my resistance? Right here. I'm going to throw some lines around just to help you see. This is a variable high volume node. This is the overnight mid, has a, let me see, 75% probability. This theoretically has an 81% probability. Everything is kind of, maybe, but this is too high. What am I going to do? Nothing. Now, down here, is too low, right? Here, support, microstructure. Can't do anything with it. Resistance, support. Let's watch. Yep. Let me come back. So, right here, watch the behavior, right here. So this is now our new high volume. So what do we know? Too high, this is support. Break, is this too low? Break low. Resistance now is here, right here. This is micro. So where my resistance in here, you see the resistance. You see the resistance right there. Shift down. This is my resistance. This is my new retail price. My resistance is right here. This is so micro, I almost don't want to show it to you because it could really do damage if you don't understand what you're seeing and put all the other pieces together. So let me show you. So this is where my first long came, right here. Not here. Let me show you the structure. Buyers are here, sellers are here. Buyers here. Now where am I? I'm above this microstructure right here. Break high, resistance, pull back, absorption. Why absorption? Selling delta. No, and I don't get under here. Why didn't it go up? Buying delta, sellers are there. Passive, you can't see them. There's a no-see-ums. You ever hear no-see-ums? Those are little bugs that bite you. So where's your long? Here, or here, or here, or. So what is this again? I'm not paying that. I'm not paying that. Shift down, cross, too low. So this is your shopping experience. And basically what happens here is if a price becomes too low, we leave it. Buyer, so buyer, this was too high, resistance becomes support. That's a long. This has over an 80% probability. Don't forget, this had 75, but this has about an 80% probability. Watch. VPOC migration. What's the language? Too low. Now, there haven't been a lot of trades today, but you don't need a lot of trades, do you? What do you need? Trades with edge. What else do you need? To wait. VPOC migration, new retail price. Watch. Now, the longs. Now, I'm going to talk a little bit about trade management today, too, because we don't have tons of trades today. Not that we want them, because we don't want a lot of trades. We're not in the business of action and dopamine. We're in the business of edge. So I'm going to let me show you some ideas here. So this is another target. You can see the liquidity there. So if you took a long here or here, whatever, all this is long. You come back here, subject to your plan, VWAP. You could take a long here. You could be taking a long here, and you got to manage your trade. Now, there's another piece here not to forget, and it's very important, and you guys should make a note of this, and that is, where's the stops? Isn't it under this leg? That's the opening swing low. So it's very important that you don't forget, how does the market work? If you got buyers in here, what's under the market? Sell stops. If you get sellers over here, what's in the market? Buy stops. So every swing has buyers and sellers built into it on the opposite side. So when you get a down move like this, if you're long biased and that's your plan, then it's reasonable for these guys to get taken out. This is your opening swing. Now I'm going to show you another long. I posted this in Trader Lab. So I was long in here and, get taken out. Runners get taken out. That's okay. Not a problem. Watch. Now I'm going to show you something more micro. Same concept, but I'm going to go down in what you guys call time frame. So coming down, and let me look down the food chain here. I have settlement in the ETH low. We can certainly go there. I have a high probability. Who knows? I'm coming down and see the delta, and I'm under my opening swing low. Stops are there. No surprise, right? Here's the stops coming out. I'm going to show you now something very interesting, I think. Watch. This is a stop and iceberg detector, okay? Selling icebergs, buying icebergs, stops. Buy stops, sell stops. Notice what's coming out here. 44 sell stops, absorption. So who's buying? Passive side is absorbing. Now we're going down, but now let's look at this. 7, we're going lower. This is the only thing I use from indicator world, and that is divergence. If I have absorption here, and that's what this is, there's the liquidity, there's the icebergs, and 44 come out, and then 7. So I go lower with less. This is your classic divergence. And look what we have, lower price, and this is delta, less sellers, you see. So I'm lower, and there's less selling. So what else does that tell me? There's buyers here. And now here's my buyers taking over. Now I'm going to go to another place. So I have this, and I have microstructure developing right here. Now this is a trigger, and this is a mini mart. You know, if I'm using a shopping analogy, this is an auction right here. What it is my buyers are here, my sellers are here, and here's my high volume node. This is the same as that or that, except it's a shorter time frame, more like a microstructure. I'm going to show you a little bit more with this so you can kind of see how you can use the auction. And this is what the volume profile is all about. It's about structure and what it says. So I don't use an indicator for this. I use this because this, I'm not waiting for something. I'm looking at structure. Sellers are here. There's the icebergs. There's some stops going off. That's lovely. And the buyers are here. Now, right here is the volume. You can see it there. So the market is consolidated. It's going too high. I'm not paying that, right? Oh, yeah, but it's on sale. Retail. Now, here's the possibilities. It's either going to go, I know, up or down. But what? It's not just up or down. It's why. Why? This is the auction, and this is the price, the fair price in this auction. And currently, just to get you, this is the fair price for the developing daily time frame. So this is the whole day. Highest volume is at this moment is sitting there. That's your fair price. But when I go to the mini mart, I have the same process, but it's only right here. I hope that makes sense. And this is the price in the mini mart. So if it's still too high, the market's going to go down to try to find out what's too low. But what happens if this is too low? And all I did was go down, take out the stops, and for an inventory grab. This is where it might happen. Watch. Right here, we break high. So what does it say? Language. Too low, fair. If I leave it and take out the sellers, I'm now potentially rejecting this retail price. This is a long. Right here. I got long at 34. Very lucky. I have no idea how I got that fill. You know, I have. Now watch the behavior. What's this, by the way? New retail price. What's this? Retail price. If it's too low, I leave. Now we have a new retail price. I can either do bang, bang, or if I go over it, but it's too low. Now, Tom, you're going to go, how do you know? I don't. But here's what I know. If this is too low, it becomes support. If this is too low, it is support. If this is too high, it is what? Try to use trackball, you know. Resistance. Support. Support. Too high. Resistance. Can everybody see the structure? Are you guys tracking? Master Chef, do I look at the CVD? Chart volume delta? Are you referring to this down here? I'm assuming. No, I don't need to look at that. I see it here. So if you're looking at the delta, it's really, this is an average, you know. This is where I'm interested. And I don't need to look at this because I see it right here. This is reflecting this is the same. These are the same. Okay. So when you see the big bubble, you see the big delta. So it's either the size of the bubble or this. They're the same. This, it doesn't do me any good, you know. So, I mean, for me, others use it and it's a wonderful thing. But it's, for me, it's just an average and it's a lagging thing. I don't use it in my trading. It's just there. This, yes, and this, because I want to see, I'm getting as close to the market as I can. Like here, let's look at it here. This is all negative. Well, when would you, if you're looking at this, you would have missed the trade. So if you look at this, you can see the sellers. And then when we come down here, we have selling. And of course, right here, it looks like it's going to keep going. There's less sellers, and that's divergence. But look at this. Where's my sellers? Now I have buyers, and my sellers have kind of left the building, you know? And this is where it changes, you know? So for me, I'm not waiting for this. I already know there's absorption here. What I don't know when I get this volume right here is, are we going to break low and it's still too high? So that's, but when it comes out the other way, I can buy it as soon. And I open this up. This is the beauty of Bookmap. So, you know, when I'm looking at this, I know right here is basically, this is it. And this, now when it breaks here, I'm already ready for it. And look where it comes. Now, right when I saw this, I already was entering. That's why I got my 34. And again, I have no clue. You know, could have just as well gotten half. I mean, that's, you know, who knows. And then this was my next obstacle. But I'm confident because of the trend. So it doesn't mean this one trade will do anything. It just means it's a trade that's in alignment. It qualifies based on my plan parameters, and then whatever it does, it does. So long here, where's my resistance? It's there. That's my scale. This is my support. Now this, if you didn't get long here, you could actually get long there, and your stop would be under there. Why? Let's go back to why. Because that central line is too low. This is my support from this structure where the buyers took over, and this is my variable high volume node from the next higher time frame that is now too low. I can buy it here, and then I can scale up here. There, because it's too high. And if I get above it, let's watch. Support, you see? So support, support, support. Just longs, guys. And now you have your statistics. Getting here, 67%. Yesterday's high or low. Taking one of them out is about an 82% probability. I guess we're taking out the high. What do you think? Getting into this gap. And then we have the IB stat at 9:30 Central Time. This is the first hour's high. And there's what? A 98% probability to take out first hour's high or low. Currently leaning north. Hope I answered your question there, Master Chief. It's a Master Chief or Master Chef? Chief. Okay. Okay. I see a question here. Now, this suggests this is a sweep into liquidity ahead of the gap. This suggests counter rotation. These sweeps are suggesting a counter rotation. There it is. This is your resistance. Now there's absorption. Let me just make sure I got everything here I need. Okay. So up to you if you do anything here. We have a trade that sets up at 9:30 Central Time. And this is what it is. It's called, and these are all structured trades. They're available to everyone at no cost in the Trader Lab. The Trader Lab community is open to everyone. There's a library of webinars, a document section, and of course the community of traders. And we're all there to help each other improve. So this says counter rotation. This says potential for an up rotation. This says potential for a continuation. These aren't signals, they're just behavior of sweeps. If you get above this, this becomes potential support. I'm going to put a little line around this. This is an order flow process. Let me show you what you're looking at. High volume, IB, gap. This is called the IB continuation trade. It's a structured trade. This is what it's working on. It's working here. This is an order flow trigger in alignment with location. And there's another little piece. Let's see if we can recognize it together. So this is important. Now you can all do this if you learn it and where to do it. Now the thing is, what's hard about trading other than randomness is it's not mechanical. You actually have to understand what's going on. So what is going on? Good question. This is a breakout. So what is this? Absorption. There it is. Sellers are there. Buyers are here. Let me show you. I'm going to just go back a little bit to show you something. Because structure. So what I'm doing is I'm reading the market. Remember, a language. What does it say right here? Isn't this my retail price? Right there. Sellers are there. There's the low volume. Buyers are here. Absorption. Does this look familiar? Absorption. Sellers. Why isn't it going down? These guys, they're buying it. So I don't, I see it and I go, oh, that's nice. So I have this volume here, too low. I've got this volume here. Which way do I break from the volume? There's the volume. There it is. I break high. What can I do with that? Well, isn't this now support because it's too low? Now what? I have over 90% probability of taking out first hour's high or low. I have a gap. Why wouldn't I be taking longs? Resistance. Now, into the gap. Structure. Okay, auction. Let's watch it. Outside edge. This is called the IB continuation trade. And now let's come back here. Too low. I break high. This is support out here. What do I have going on here? Chop, chop. Watch. Where's my high volume? It's there. I'm not paying that. Yeah, but it's on sale. Absorption. Chop, chop, chop. Resistance. Support. You can see it here. The volume is there. Break high. This now is potential support right against where the sellers were. Break away. Outside edge. High volume. Sweep. Potential counter rotation. This now is your high volume, the retail. Let me show you so you can see the difference. This is your high volume, your retail price, right? Right here. So what do we know? Too low. Here, support. There it is. IB continuation trade. Volume is there. Break high. New retail price. So this is where your volume is, and your volume is also here. So you have high volume, support, outside edge, volume. For this thing to continue, got to go there. If it comes under the volume, this becomes resistance. Resistance. So, and what's this over here? A sweep. Isn't a sweep something that says potential for counter rotation? Where's our support? Here and there, but here you get the sweep. Let's look. This is a sweep. This is micro. Let's look at the structure together. And by the way, everybody takes stops, so we got to get over it. A stop is overhead and cost of production. I know we don't like them, but hey, you want to be in business, you got to pay a bill. Break high. This now is resistance. So too low. This now is our retail price in the developing time frame. Let's see what happens to this thing. Sweep, break, test, long, scale, and then potentially north. Watch. Resistance. Support. See the structure? If you can learn to read this, now it's not predictive. The thing about trading is alignment. Long, scale, resistance, resistance. Why? That's where we dropped it from. This was too high. I'm not paying that. Leave, leave. Oh yeah, but it's on sale. This is the retail price for the day, and these are micro. This is where the sellers took control here. So if I'm going to get long, I need to be scaling here or where the sellers took over, which was basically here. And the high volume is there. So this is the same as that and that. They're all the same as far as different time frames. I hope that's making sense. And then watch. And then where's my support? It's there. And what's this? New retail price. What is it? Support. Now, I'm going to talk about trade management. So this is when we get above this. This is support. There's absorption. There they are. And I go up. Now this is support. And I break low. You could be out of this thing. Okay? And then that trade could be over. It's as simple as that. So what you need is, what's the condition of the market? Where are the locations where you might get a reaction? Do you have structure that supports along? For example, this, and the trend is up. And where were the sellers? They were here. See them there? Where's the support? There and there. So you know where support and you know where resistance is. So, when you break under here, you must, here especially, you must clear this and keep going. Okay? When you come under it, that's a warning Will Robinson moment. When you get below here, you'd be out. Up your plan and your time frame. Other traders are going to be, way out here, depending on your plan and your time frame. What I tend to do is use the structure for managing my trades. The other thing I do, and it's not important what I do, is different. If you trade multiple contracts, different time frames are at work. So if I'm trading something towards a higher, possibility target, I have to sit through rotations for runners. If I'm just trading close to the vest, then I'm going to be using the break of structure to manage my trade and then get back in on counter rotations as long as the whole thing doesn't fall apart. Now we have another trade here. If this comes under here, then we can, come down. And it doesn't mean anything. You could be done. If you're trading the dominant side and look at the liquidity pressing, this is where Bookmap can help you, because what you're going to see, look at this, 800 come in, 800 are out. 450 in, 450 out. What is this? They don't intend to trade. What's the effect though? When this comes in, it skews the book. And that could create, or, help pressure the counter rotation. Now, we always have to ask ourselves, why would this come into the book if it doesn't intend to trade? Possibly to get the counter rotation, to get the stops out, the liquidity, so these guys can buy. It might be them. I have no clue. But what do I know? I know this is too low. I know there's going to be stops right here. And I know this is an outside edge. So I have support, support, got under it. Okay, next, here. And if I just come here, I can come right back here, but you got to have range. Let's look at this one. Now, this is sort of an error, okay? So I'm not saying anybody should be trading this, but this is pretty important right here. See all the iceberg action? Microstructure right here at the location. See, location, location. Think real estate. These are not trade recommendations. It's right here. Sellers were there. Buyers are here. Buyers are here. You see them. Now, we break high. We test the microstructure. And the potential is to go there because that's our high volume and the retail price in the developing daily time frame. Now, these are not trades. They are structure. The thing to understand about how the market works, and you guys see me do this every day, really, and I take stops too, so, everybody does. Can't get out of that one overhead, is to understand what's happening. Now, the thing about this is, this trade may not be your trade. It will be somebody else's potentially. But the thing that is, if there was a 10-point range, it's the same. The only variable in here is, of course, the randomness of the market and the range of the rotations. So this, could be a long to there, or actually, right in here where the sellers took control, but it's basically here. So we have to see if we can get up to that high volume before we fall out the bottom. So when I put a trade on, and you have to vet everything for yourself, I'm looking at the range, and I'm also thinking, where's the fuel? The fuel being the stops on the other side. So I got buy stops here. I got buy stops there. My sellers took control here. My buyers are over here. So if my buyers need to clear, to get above these guys who took control. Buyers were here. That's why you get that up move. But the sellers are now below the buyers, so this sets up your resistance. Just, so you would use this volume for scaling, or this one. And if you don't get scaled, you don't get scaled. That's just the way it goes. And these aren't trades, these are just structures, okay? Are you guys with me? Hope you're getting something out of this. And I want to talk about trade management too, but let me see if you have any questions. Yeah, thank you, Jim. Popo, are we in a bear market? I don't know. I don't have opinions on that. When we were selling off, I thought, well, maybe, maybe because we'll never know until hindsight, unless we get a excess or a blow off top, which we haven't had. And I suspect it'll be something dramatic, but it doesn't have to be, So I align with the intermediate time frame. The higher time frame, because look at the down days we have, or the down rotations. In day trading, you can trade either side. It makes more sense to align with the dominant side. So the dominant side in the intermediate time frame, because we're floating higher, and a lot of this might have to do with the end of year kind of stuff, where the last quarter is pretty, very strong. So that's, the Santa rally, all those things we've all heard about. So that might be what's happening here. Doesn't really matter. So I don't have that opinion because it's not worth anything. I mean, if you look at the pundits, they've been calling for a bear market, I don't know, a year, 2 years, whatever. No idea. So, and eventually it's like a clock is always right twice a day, right? So eventually they'll be right. It's excessive. AI is not everything, whatever it is that's negative, it's always out there. the market tends to go up on what's called a wall of worry. So, and that's what I think is happening, and short coverage. Because the reason we're going up is because the shorts are getting squeezed. Eventually, they'll get it right. But a lot of traders go bankrupt, trying to pick the high. I've never found that I have, everybody gets lucky, by the way. Luck, you can't take luck to the bank in this business. So you really have to have edge. I certainly have no edge predicting anything, whether it's short term or long term. I don't try. I can suspect situations, but I don't trade what I suspect. I trade what fits the plan. So my guess is as good as anybody's and as bad as everybody's. So anyway, I hope that's a little, just to give you an idea. I don't think anybody knows where that's going to be. In fact, nobody does. Every reversal starts out as a counter rotation. They all look the same when they start. Like this is a counter rotation, but maybe it's something more. Maybe we're done, right? And now we're going to come out the bottom and take the longs out, because we are looking potentially, and this is always all you got, for what's called responsive selling. In other words, it's the weekend. We got up here. We got through the gap. I don't know. Let's take some profits and get out of here. Possible, right? That's in our plan for today. But where's the high? That's the thing you don't know. I do see this, and notice now they're pulling. So now we want to watch the other side. So if this is here to skew the book, then what? Either let's look and see if we can see anything down the financial food chain. Not really. So we can watch this, and remember what happens in all rotations. There's stops on both sides. Like here, sellers were here, boom. Buyers took it. Where'd we go? We took them out. Thanks for playing. They get a coupon to the buffet. Now the longs are in this leg. Well, opposite. What you don't know is how far back. Now this is a support area, remember? It's right there, right there. So let's see if we get any reaction here. It's not a trade recommendation. We're going to watch it. This was too low in a developing daily time frame. It's the VWAP. And if it's going to go anywhere, potentially it's going to go there. Not a trade recommendation. This is just not, remember, there's going to be stops down here. So let's see if it does it. We don't have a trigger here, so we're watching. See the volume? What it would need to do is break over here, this low volume area. So it's too high, too low, retail. I got to get over the sellers that are, you see the sellers, icebergs? So I need to get over these guys to have a potential trigger based on this microstructure to go back. Not saying it will. It's not a trade recommendation, but we can observe the behavior. And the idea of this is to understand how the market works. It doesn't mean that we won't just do this and fall right down. You know that. I know it. But let's see what it does. I need buyers above here. Is everybody with me? How are we doing? I don't use time, Jay. In the developing daily time frame, there's no time. It is behavior. How long does it take for this triggering structure, microstructure, to set up? Here's the time. Called it 11:30. Well, this one took 5 minutes, okay. But some of them are only going to be like that. I take trades sometimes 15, 30 seconds of information. So it's not time-based. Most of us start with time, I understand. And I use time like RTH, ETH, because they're sessions. But I don't use time as we typically know it, 5 minute, 15, all that. No, because the market is not held to the clock. Hope that makes some sense. Think about what a clock does. Who created the clock? We did. Well, what does that have to do with the buyers and sellers? They're not looking at their watches, you see. We are. Well, the market doesn't work that way. Now, this is where support is, the volume in right here. Let's see what happens if we come back to it. So this is our micro support. So support is here, where it broke out. Notice where the test is. So we break high, we test the volume, which is there. So now I'm seeing my selling, and I got a sweep here. So that's not so good. That says counter rotation. Now it needs to hold this structure to continue higher. If not, it's just going to come under here, take stops, and the trade would be over. And I'm seeing more selling. So we got to see the stops coming out. So we have to see if these buyers that were here think, oh, really? You giving it to me again? Back on sale? Let me run back and throw a few more in the cart. Let's see. This is where it was too low on the test. And the buyers absorbed here. So I got here, here. And it's not mechanical. By the way, so you know, if this is not where your stop would go, if you're in this trade. Because, and here's why. How many of you have always said they went for my stop? Well, we're victims, right? You're not a victim. What you are is you're acting like a retail trader. And retail traders are like lemmings because they do the same thing. They're risk adverse. Well, so am I. But how many times have you put your stop one tick under this or something, you get taken out, and then it reverses from there? The reason is that stops are there, and the icebergs need liquidity because they're limit order. So they need market orders because they're limits. So passive. So you don't have market order. You have market orders, which are stops, and limit orders on the other side, you see. Notice where we came so far. This is our area. Now we got to get out of this thing and get through there. Resistance. And then get through here. So we'll see what it does. But this is a microstructure. This is an auction. I'm not paying that. Yeah, but it's on sale. What do you think? Retail. Breakaway. Sweep. Counter rotation. We got to get above this, that, to go higher. If I can't get above there, hasta la vista, thanks for playing. That's it. So let's see what it does. How we doing in YouTube, guys? Please give a like. Hope you're getting something from this. This is Trader Lab. We still haven't found the Holy Grail, and we're not looking for it. What we're looking for is process, consistent application of a process that generates a positive expectancy over random distribution of interactions with the other participants. We all take stops. We all even have losing days. What are you going to do? It's trading. But the idea is to be consistent and approach this like a business and just take your trades when they show up. This is not necessarily a trade you would take. I'm just showing you behavior, okay? Because I want you to learn how to read the market. Now we look at the absorption, and look, we came down. Is this our stop pick, right? Micro volume is here. Is that our stop pick? See? So when I trade, I'm just telling you, I don't, and I'll take a larger stop than some of you might, because over time I have found that being uh, putting my stop with everybody else is an invitation to get taken out of the trade. Do I do better? And this is where your work comes in. Would you do better with a larger stop away from this, because you understand that we might just come down here, get absorption, maybe, and then continue? Because these buyers might come back in here. And if you take a larger stop on this one trade, how does that work out with all the other trades you don't get stopped out on? So I had to do that. So you need to do that for yourself to validate your process. And that's the work part of this thing. None of us want to do that. We all want to push the button, get the dopamine. I mean, you need to understand your psychology too. So we are fearful. So we use a real tight stop because we don't want to lose, fear of loss. And we also want certainty. So we don't buy it, here or here. You see, we don't do it because we'll end up buying it here. Well, now if it's 100% uncertain 100% of the time, stops were here, right? What do? Took the stops, you see. There's the icebergs. These are the guys. This is my point about where you put your stop. I do not put my stop. I can't do it. I'll just say this to you. My stop is further away. And when I get stopped out, I take a larger stop, but I also avoid this stuff. In fact, depending on your trade plan, if you see I call these stop picks, all right? If you see a stop pick, you can actually do an ad if it's part of your plan. And then, of course, you have to get risk neutral. But what else do we know? If we know there's stops under this, then we also, and under this, by the way, because that's where the stops are from this. You always got to look left. Then we have to come back to the volume up here where the sellers took over, which is there. And then you can trade back to this. This is a sell trigger right there. There's your volume. See how it works? Volume to volume. So it works volume to volume. Now, subject to your plan, I'm going to give you something that might disturb you. If you're counter trend, you can be short this. If you're trading with the trend, you're long from here. And you're trying to go here and back here. If you get above this, you continue. If you don't get above this, you're going to rotate further. That's about it. Master Chief, what's the difference between a low volume day? Well, low volume, it's thinner. So the book can be a little bit thinner. There's less limit orders in there, but a lot of this is algo, The other part of it is the rotations might be less, especially after 10:30 Central Time when the EU closes. So, most traders don't trade today. They just don't trade, so it's up to you. I trade every day if there's volume and I have a setup. I just show up and it's like going to work. And it's still random. So this looks like maybe, and this was the IB. So if we don't clear the IB, it creates something called the IBF. Now this is counter trend. The IBF is a short. And it sets up actually. This is potentially an IBF. This is the long return. If we clear, we go higher. If we don't clear, we can rotate down. For me, it's not a short. Other traders in TraderLab are going to sell this. And it's really to get the longs out because we know the market's long and we also anticipate it's Friday and we might get, you got all these longs in the market from all, this run up. You might get some profit taking ahead of this weekend. So maybe not, right? So this is a counter trend short, or it's a continuation long here, and you'd be taken out of the trade. One or the other. Continuation long, or failure to get here and to get over this right there is a potential short, and you have to get risk neutral, and then all you're doing is you're looking maybe to come back here. High volume. And these aren't trade recommendations. So it's all up to your plan. And here's something probably many of you won't consider. How about being done for the day? Because this is a business of edge. The only thing I think that really, well, it's not a recommendation. I think the idea right now is, where's the stops? Sitting down here. So where's my support? I got it there. I'm under it. I have volume here, but this is where the sell stops are. So the idea is, the potential is to get these guys now and to come out here. Different time frame. Now, if this is interesting to you, you should use the link in the bottom of YouTube. Visit Trader Lab. This is shopping in multiple time frames. That's as simple as it really is. An auction is shopping. That's what it is. So you know how to shop, you know how to trade. Then the thing is, you have to go and you have to reverse engineer the processes to see which ones and what conditions they have an edge on. And I cover all this in my streams every day. And there's a library of webinars, by the way. Let me show you what the Trader Lab looks like. I repeat, turkey for everybody. This is what the Trader Lab community looks like. There's a lot going on in here. Charts, a lot of interaction. It's pretty, a lot of folks took off today, or they traded in the morning and they're already done. But there's a lot goes on in here. A lot of posts, a lot of interaction. Talk about harmonics, a lot of data mining. This is an advanced methodology, but it's not complicated, There's repeat. NQ Trader. Our senior trader has over 50 years trading. I've got 47. So some of us been doing this a while. This is what the library of webinars looks like. Thanks, Ned, for curating this. This is the primer webinar. It really talks about anchored inputs. In other words, gaming, and how market mechanics. You can learn a lot there. It's about an hour. It's got about 34,000 views. You might want to take a look at it. Meet the Trader Lab. The holy grail of trading. Well, there isn't any, but how close can you get? Day trading, fantasy and reality. Stop gambling. Start winning. Multiple time frame contexts getting aligned. This is pretty important. Day trading, why most traders using indicators fail. You might be interested in that one. And there's a lot more. And then the document section. Understanding statistical probabilities, the condition of the market, auction market theory, context types. There's all kinds of stuff in here. So you're all invited. You can use the link in the bottom of YouTube if you're inclined. There's no cost. And the other part of this is you won't be solicited, you won't be harassed or otherwise abused. This is a professional community of serious traders. So it's not romper room, it's very much about the business and helping traders differentiate the fantasy from the reality, and also dealing with the obstacles we all face. We all have the same challenges when it comes to trading. Don't we wish it was, quote, simple? It is simple, but it's random. So the randomness, because I can't tell naturally or predict, because I have no skills at prediction, and I don't think anybody else does either, that what it'll do. I know where it might do it. I know why it might do it. And I understand what might happen and where. It doesn't mean anything more than that. And here's our buyers are back in here again. Now, no way to know. So this is where, if you're a short time frame micromanager, you'd be out of the trade. If you have a runner, which has to be much further away, outside of this thing, down, then you either will give all this MFE back, which can be traumatic for some of us, or you're just going to ride these rotations. You see, that's part of the problem, is knowing your time frame and being okay with the outcome of your plan. You can't have too many plans. You got to have one that has an edge. And it's almost like making sausage. You're just pushing it through the hopper. Same thing with the casinos. What do? They just play the game. They're not attached to the outcome of one hand. In order to extract their edge, they can't change how they play the game on the next hand. Otherwise, they've thrown their edge away, and now they're gambling. So the house in the casino does not gamble. The gamblers gamble, and they also get paid. But the cards coming out of the deck are random, and how gamblers play cards are random, right? So that's where the house has no control. We have no control either over this. We only have control over what we do. If you don't have a trade here, it doesn't matter what the market does if there's no trade. And that's where you have to know in advance where your trade's going to show up. When you have a trade plan, you're not going, what should I do? You already know where your trade might show up, and you're waiting for it. It takes that kind of understanding. And even if you get this and you don't have a trade, then there's nothing to do. There just is, you don't have a trade. You go, well, that's nice. That's not your trade. We're not here to be chasing the market around. What I do, and most traders I know who are consistent, they already know where their trade might show up. They don't know if it will, and then they have certain requirements. Are they aligned with the condition of the market? Well, which is longs. If they go counter trend, what do they got to do? Well, get risk neutral. Where might it go? Might come down here. If it doesn't do it, then what? You're going to get taken out. If you're risk neutral, you scratch the trade, which is always requires a minimum 2-lock configuration, which is what I cover in Traderland. Because if you have an edge of getting risk neutral, it gives you something tangible that gives you the courage to manage your fear, which we all have. We're wired for fear. If I know I have X positive percent probability, it's tangible. If I don't have anything other than maybe, which is all I have on an individual trade, and I have nothing tangible, then all I have is emotion, which means fear, looking for certainty, FOMO, revenge trading, all the emotions, because that's all you have. So to offset emotional stimulus, or hide, as I call it, the lunatic under the hood, your primal wiring, tangibility or something, a metric, is something you can touch. So when you can touch something, you can then place it into a process or plan, and now you have a track to run on. And then in this randomness, you're going to apply this statistical probability when it shows up and accept the random outcome. Does that make sense? How do you know if buy volume will trigger a sell at 10:15? My time, I assume. 10:15. I don't. Well, this is my 10:15. I don't see any. Um, I don't know what you're referring to at 10:15. Yeah, the only other thing you could do with this kind of buying, is take this long out of here, which is an IB continuation trade. And there's more. This is now the retail price. This is a volume check here So right here, let me get rid of this. Let me show you. This is your retail price. Notice it's too high. And now we shift down. The possibilities are this or this. If I break high, I can buy this. And then, if you're aggressive, this is very aggressive. You're near the high of the day. And what you need to do is you got to get risk neutral. So this right here and right here, very aggressive trade. It's not a recommendation. But this buying, look at the change in the delta. Very aggressive. This is a aggressive long. This sets it up. This is your IBC, break high, resistance. You took the IBC over here. You got to scale ahead of that. That's resistance. Pull back to the IB right here where the buyers were. See the absorption? This is your support area. Here, shift down. It either does this or this. If it breaks high, this is support. Now this is support. You could be either long from there, long from here, stop under here. Very aggressive trade, not a recommendation. And then you're going for the next level of liquidity. You'd be risk neutral. Now, again, as far as a structured trade goes, you have to vet these. But these are available in the 60 PDFs that I share in the Trader Lab, and you're all welcome to them. Now, I want to remind you guys, first of all, give a like if you're visiting in YouTube today. I'm sure, if you're here today, appreciate you taking the time. Also, don't forget there's a special series going on, Pro Trader webinars, which are happening this week, I should say next week. And here's the schedule for it. Carmine was this morning, if you know he is. And then we're going to have others in here. So you might want to take note of that. There's a Black Friday sale. Go to bookmap.com. You can do some, as they say, save some dough, which I think is always good. You can use this QR code or just go to bookmap.com and check it out. I see we're making new highs. Not so bad. And if that trade that I discussed is part of your plan, then great. If not, come to Trader Lab and you can learn structured trades. Let me see if I can find that for you before I have to tune out. Where is it? No, can't find it. Sorry about that. So please give a like, guys. I'm going to hang with you for a few minutes and we can watch this market. I'll bring it back up, see what's going on. Making new highs. So the last long in Trader Lab would be here at the IB high, here. These are structured trades, a little more advanced. Here's your high volume. We got to watch this. This is where and you can watch the outside edge and this liquidity right here. Let's just watch it. I'm pretty much out of time. This trade could be over. Now, this might be too active for you, but how do you do this? If you're monitoring the behavior of the participants, when you come under here or under here, you could just be out of it. Anyway, hope you got something from today. Please don't forget to give a like. Review these streams over the weekend. Also, feel free to visit the Trader Lab. Use the link in the bottom of YouTube. There's no cost for it. Look at the library of webinars. Start watching them if you're interested in this process. I can assure you that if you want to create sustainability and you're not currently consistent and profitable in spite of the random winning trades, that means you don't have an edge. Over time, that is not sustainable. So take what you've learned, review, ponder, think about it, and if you keep waking up in the same place, that's called Trader Groundhog Day. I did it for years. Random winning trades, trying to make it better, same result. In spite of winning weeks, winning months, and a lot of winning trades, I was still leaking equity. So I tried to solve it. But I figured out doing more of the same was not the answer, was actually the problem. Please give a like on the way out. Appreciate you taking some time to visit with me today on this Friday after Thanksgiving 2025. And I look forward to seeing you on Monday. Have a safe weekend, and thanks again for visiting the Trader Lab today. See you soon. And don't forget the Black Friday sale. Go to bookmap.com. If you've been thinking about Bookmap, this is the time to do it.